Major funding for these programs is made possible by grants from Chase Commercial Term Lending, New York Community Bank, Capital One Bank, Perfect Building Maintenance, M&T Bank, Customers Bank, Genova Burns, Terra CRG, Meridian Capital Group, Wyckoff Organization. Additional support is made possible by AKA Hotels Corman Communities, Aerial Property Advisors, AVR Realty Company, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, Collins Building Services, CPEX Real Estate Services, Cushman & Wakefield, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, Eastern Union Funding, Fisher Brothers, First Nationwide Title Agency, Flushing Bank, Friedman, Handler Real Estate Organization, HAP Investments, Hersha Hospitality, Hodges Ward Elliott, Inc., Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, Madison Realty Capital, Matone Group, Mercantile Commerce Bank, New Banks, Newmark Grubb Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Stonehenge Partners, TD Bank, The Continuum Company, The Moynihan Group, and these friends.
Israel bond financing. What is it? It's something new. It's an emerging trend in real estate. People from around the U.S. are taking an interest and trying to get bonds financed on real estate. I know a little bit about this, but I decided to bring 4 individuals who really understand this subject together today to talk about the subject. So I have 2 people who came from Israel, 1 person from Los Angeles, and 1 who grew up in Israel. My guests today include Yaron Block, CEO of Leumi Partners, Avram Well, who is a partner and head of the corporate department at FBC, Keith Hall, who is the CEO of KBS Strategic Opportunities REIT, and last but not least, the kid who grew up in Israel but who is a native of New York, Shimon Shakori, who is the president of Ariel Property Advisors. So you're the underwriter, you're the counselor, you're the borrower, and you're the advisor. What is Israel bond financing? For the layman's, what is it?
Well, Israel is a very strong fixed income market, a lot of demand for bonds. U.S. companies with commercial real estate can issue bonds in Tel Aviv, which are denominated in shekel, sold to Israeli institutionals at attractive yields.
So how did Leumi, this major bank in Israel, decide to get so active in this market?
So we're involved as an underwriter. Obviously, we have the bank's reputation that we have to think about. And so we're involved always in the deals that we feel are the top-notch deals, the deals that we feel comfortable with. Our due diligence process is very thorough. And the deals that we get involved in, both as advisors and as investors, I have to say, are the deals that we feel are suited for the Israeli market.
So here's a question. Keith, you're the first REIT, okay, who went to Israel to do financing, correct?
That's correct.
How did you decide to look at the market of Israel? I mean, you were reading the press, you're hearing the news. How was the decision made?
We'd read a lot of the issues that had come out, and we were reading some of the details, and we were surprised. Some of the names finally popped up like a related. Whoops, we're not supposed to mention names.
No, you can.
I can, okay. Some institutional names that surprised us, which warranted research. So we made a few calls to friends in Israel and asked us to bring parties to us so we can talk about it and vet out the opportunity, the structure, the pricing, just see if it was the right fit for a KBS portfolio.
Now, what type of assets did you secure in this type of financing?
The REIT that accessed the funding is a unique product. It invests in all asset classes. It isn't specific to just multi or office. It was predominantly office, but it covers almost every asset class out there.
Now, what is the difference in the cost of reaching the capital markets in America versus the cost of reaching the capital markets in Israel for a real estate company or an owner of properties?
Right. You mean the cost of actually?
The financing cost, the yield on the bonds.
So the rule of thumb is typically it obviously depends on the rating you get. I mean, we have a local rating, which is also done by Moody's and S&P in Israel, but it's a local Israeli rating, which on average is about 4 to 5 notches above the typical or the relevant rating that same asset would get in the U.S., just because of the fact that Israel has lower rating as a country compared to the U.S. Just again, as a rule of thumb, if you're looking at at the AA standard, around the AA minus standard, which is the highest standard to date in Israel, there usually it'll be priced around 4 to 5%. In Israeli shekel, non-linked and fixed.
That's Israeli shekel. So we have a conversion to the U.S. dollar.
Right.
So how much is that?
So the conversion, it depends how you do it. There are a lot of options on how to go about this. You can do it gradually, like most of the issuers do. They do the conversion or the swap between the dollar and the shekel because you owe shekels and you're deploying it in dollars.
Dollars, right.
And so you need to mitigate the currency risk. And that's done. There's several ways to do this. There are a lot of different options to go about this. But usually what we tell clients is to try and do it over a period of time, which is what usually people do.
Now, when was the first deal done? And who initiated this first deal? You said prior to the show that there have been about 17 transactions?
No, I mean, there have been so far 17 issuers. The numbers are pretty staggering when you think about it. This is a new phenomenon in Israel. It's been around for, basically around 2 years. It started out with small issuers or first issuers coming in, I think, around 4 years ago, I think it was. Mm-hmm. About 4 years ago, 5 years ago, but the real wave of issuers started coming in the last 2 years. So we've today 17 different issuers tapped into the Israeli market. In 2014, the total amount raised in debt for U.S. real estate companies was about $750 million. In 2015, it almost doubled that. Almost doubled that, almost $1.5 billion dollars worth of debt raised. And so far this year to date, in the first quarter, we're up to about almost $500 million, about $480 million. So this is a growing trend. We're still on a learning curve, but the more we learn about this, the more companies that approach the market, the more experience we have, and we know how to look at these opportunities.
Now, you announced that you were planning to do this in December, and I think the issue went through in March, or?
Yes.
And how much did you raise?
We raised $250 million, approximately.
And that was asset specific or REIT specific?
It was 100% of all the assets in the REIT. There was no special selection. Everything that we owned.
And what type of assets were in the REIT? Office buildings, residential?
78% were office. The other 22% were a couple multifamily, a retail, some land assets. I think that covers it.
Now, people come to you and they hear this phenomenon, and you're on the ground over here. Okay, Yaron is in Israel. Avram is in Israel, Keith's in California, but don't worry, he could be the next advisor on this because he's gone through the experience. When people say to you that I'm thinking of the deal, how do you make the smell test or the decision before you talk to the people in Israel?
The first thing we do is we provide them with a thorough presentation about what it means and what it entails, because it's really not for everybody. The second thing that we ask them to provide us with is a list of their assets and their capital stack so we understand it better. And from there, if they're interested, we take the time to analyze every single property, every single equity stake that they have in each one of these properties, and make sure that over the next month or two, make sure that whatever rating or interest rate and raise that we predict, we can actually do. And we do that in conjunction with our teams in Israel and partners that we have in Israel, if it's Leumi or somewhere else, on a regular basis. But the most important thing about this process, which takes time, is to spend the first few weeks understanding the viability of the client and understanding making sure the client understands what it entails in terms of.
So how do they? Okay, Keith analyzed the market. He had heard about Related, and other people had gone into the market. And KBS has a great reputation of being insightful in the market. How do you find customers? How do you tap the customers, and how do you represent them? There are people like Shimon and Ori and others, but do many people do what Keith did, took the initiative by themselves to come directly to the underwriter or to the law firms?
Usually the process will begin with an advisor on the ground here or the underwriter. Then they will select the team of advisors, legal and financial advisors in Israel. The process is rather extensive. It's like going through an IPO but doing it in Hebrew and working vis-a-vis the rating agency in Israel and going through evaluations and going through the process with the Israeli Securities Authority. So you need to have a strong team both here in the States and also in Israel to walk you through it.
When I hear all of these categories, I'm assuming that there are rather hefty fees for something which might not happen. The possibility.
The structure, I think, is that the majority of the fees are paid on success basis only, like underwriters. And I think all the advisors who work on it, take only a small portion of the fees if the deal doesn't come through. That's the way the market operates.
But also, I'd just like to add that Avram is right, obviously, but there are fees associated, and the first time you come to the market is obviously more complicated and takes longer. It's about, a 5 to 6 month process depending on the complication of the deal. But the thing is that once you approach the market, this actually opens an avenue for future financing for you in the next years. And so the first time you go to the market obviously is more complicated.
So in the same question over there, what about people who have tapped the market? Yeah. How many of them have come back to the market?
Several already. It's a relatively new thing in Israel, but several have already tapped the market twice or 3 times more.
Now, Keith was saying in what his asset has all the different asset classes in there. In general, what type of assets are appropriate or the best type of assets that the underwriters, the investors, and the rating agencies like? Do they like multifamily? I noticed there was a unique offering that the company in the South, which was in the healthcare business, just went.
Strawberry Fields.
Strawberry Fields just went.
Nursing homes.
A nursing home, which was a different type of asset than in the past. It wasn't an office building. It wasn't a condo development. It wasn't, office buildings. So there.
But they had a big variety, I think almost 40 nursing homes, and the rating agencies were very happy with the diversity of the assets and the income of the income history of the assets. So
even though it was nursing homes in the U.S. are tied into reimbursement levels from insurance companies and from the government. So there's a question. I'd rather get rent sometimes than to be dependent over there. So it was interesting that they did that.
I think what you need to always take into account, the name of the game is trying to get the best rating possible, because that obviously translates into lower rates, lower interest rates. Diversification is obviously very important, but you could always combine within that company that you set up, because what we do is we set up a specific company, that into that company we put in, that specific company will put in specific assets into this company. The question is how exactly, you build this holding company of assets basically, and you need to have the right a mix between cash-generating assets and it could be development assets as well. But the diversification and the right balance between the two is what makes it.
Now, you also have the difficulties, because I remember I had one of your colleagues on a panel I did last year, and a $50 billion bank sent their executives to the event because they wanted to understand it, because they're lending money to these people, and they wanted to evaluate how do they look at the bond financing. Is it primary debt or is it subordinate debt on their own? How do your lenders look at you taking this type of debt?
Most of our senior loans have provisions for second mortgage debt or mezzanine loans. In many cases, they prohibit it, but they don't prohibit other upstream levels of financing, and which is what Yaron was describing. There's special BVI that you drop the assets into, and now that is the issuing entity. And there aren't provisions that restrict that. We did have one or two loans that required some general consent, and they were fine with it. It might be interesting going forward. First mortgage lenders who have not used to having added this restriction.
No, this was specifically.
Might think
this
of having
was
to put it in
a
there.
very large multifamily first mortgage lender wondering, looking at because a number of their clients had heard about it or were thinking of doing it, and they just, there was a clarification because, not every New York law firm is that knowledgeable as opposed to somebody like Avram's firm who specializes on it. And, there aren't that many feet on the ground, as they would say here. There are certain advisors who know enough, but, when it comes to push and shove, the lender wants more of a comfort level.
But the way Yaron also explained it, what the vehicle that would issue in Tel Aviv is a special purpose company, which is several levels above the actual assets, because usually you would see assets which are held by different LLCs, and the LLCs are held by the special purpose vehicle, which is the issuer. So actually the lenders would be lending at a different level than the banks have lent. They're not really competing.
Now, are some of these issues that are being done utilized to pay off the debt in America?
Well, I think usually what the market would be looking for would to see the money being used for further investments, buying out partners, etc.
Use of proceeds is major in everything we look at. I think that's probably one of the first questions we'll ask an issuer. What does he plan to do with the funds? But after you know that, you can start building a deal. But use of proceeds is very important. It's not. The Israeli market. We don't like to see people tapping the Israeli market in order to pay off debt in the U.S. It's not your typical kind of deal. Sometimes it will be involved.
It happens with Mez.
Yeah, that will be sometimes the case. But essentially, it's just it's meant to be able to do more of what he does best.
But many borrowers have said to me, it's less expensive than have mezzanine debt. So in a way, they want to pay off their mezzanine debt.
Yeah,
it's an alternative.
So
it's an alternative.
To
Absolutely.
that. So it's a use of proceeds.
You can look at it that way, but the way we look at it is, it enables the real estate company to continue doing what it does best at a lower cost of capital. And that's the.
It's also important to remember you're cross-collateralizing assets. You're not just
Yeah.
here when you have one asset and one mezz debt, it's against that asset. When you have the corporate level, you're cross-collateralizing many assets. So it's a little bit different. The other use of proceeds could be, instead of using equity, you extracting the equity or some of the equity out of the vehicle
And
to buy more.
To buy more assets. Okay.
Buy more assets to create accretive acquisitions.
In all of our conversations, generally, the intent is to buy new assets. That doesn't mean you can't carve out a small percentage to deal with right-sizing your balance sheet. Paying off a mezz, which just, again, it's you pay off the mezz, you've increased your equity cushion. So there's negotiating points, but if you went to them, I believe, I've only gone there once, if you went to them and said it's to pay off 100% to other lenders, you would get pushback.
It's not going to fly.
Now, what about utilizing some of the proceeds to make loans? Because many developers today, since the yields are lower in America, many owners, developers have gone into the debt business. Can a a borrower who's benefited from Israeli bond financing go out and lend money?
The simple answer is yes. I mean, assuming that he's lending money, in spaces that he obviously has a relative advantage
in the real estate field.
And for us, it absolutely is part of the business. At the end of the day, you're buying exposure to specific assets. Sometimes you'll do it directly through equity. Sometimes you'll do it through a debt that you give out. It's a loan that you give out. So it depends on the specific incident, but the simple answer is yes. I mean, it makes sense.
I would add to that. I think if you do what you say you're going to do, they're fine. That's what people want to see.
Mm-hmm.
If you say you're going to do one thing and then add something that wasn't mentioned, even if it makes sense, it gives them discomfort because if you had thought of doing that, why didn't you say it before?
Mm-hmm.
It's not that it's a bad thing to do. It's just people want you to do what you say.
When when a lender makes a loan, they hope that the loan is going to be repaid over a certain period of time. So my same question is, how long is the period of time, and what are the traditional terms that a borrower gets when they get financing on an Israeli bond issue?
Well, the duration of these kind of bonds could be anywhere between 4 to 6 years. You would usually have a grace period in the beginning before you start paying principal. And I think many issuers, as Yaron said, we're still a young market, so we don't have this long of a debt. But I think many issuers are thinking about refinancing it in the future when they get to the stage they need to start repaying it back.
Now, who's buying the bonds? We were talking earlier. Institutions are buying the bonds, and individuals can also buy the bonds.
Israel is a very liberal market for fixed income. We have a lot of institutional money in the market, like insurance company, pension funds, etc., but also individuals, either directly or through mutual funds. And I think in the beginning we saw more individuals and mutual funds and less institutional money. But as the market is emerging and getting more sophisticated and feeling more comfortable with the issuers, we see more and more institutionals also investing into these bonds.
Now, could your parent, the bank, Bank Leumi, sell to individuals?
So we have, obviously, there's a process of going about that,
Right.
but we'll get involved as Leumi partners in the deals that we feel comfortable with and that we lead as an investor. The bank branching network, again, it's a completely different network, and they have their way of doing things. It doesn't have to do with us, but if they feel it's a good offering to the clients, so they'll go out and
So
give
how,
information.
if I was an individual in Israel, okay, how small of a bond can I buy, or how much smaller?
You can buy any amount. Many households in Israel, since Israel is not such a strong equity market, what they would invest in is bonds. So for instance, they get free 10,000 shekels. They'll buy a portfolio. You can buy any amount you want through your broker, which is usually your bank.
So there's liquidity on these bonds.
There is, depending on the bond. Michael, I just want to point out that, and I think Keith, who's come to know the Israeli market as well recently, the Israeli market is very sophisticated in the things that we're able to come up with, the ideas and the way we implement these ideas. And I think that's one of the things that we have going for us. It is a small marketplace, but a very sophisticated marketplace with very high level of long-term savings in Israel. I think one of the highest in the world on a per capita basis. So long-term savings is a big thing, and that's why the bond market and debt market in general is very strong in Israel. And we come up with these ways to tap into markets outside of Israel, because at the end of the day, the Israeli economy is a relatively small economy, and we're looking to diversify outside of Israel and give institutional investors the opportunity.
Do you see
to do
more
so.
REITs like yourself going to this market?
Oh, absolutely. We've had numerous phone calls from our competitors in our space who have asked about the experience and are interested in at least vetting it out for themselves.
Now, but you're a private REIT. You're an unlisted REIT.
We're public, non-traded. We're not listed.
Right. Now, do you see the regular REIT world, the traded REITs coming to the Israeli market as possibility?
I don't see why not. It's an interesting piece of paper. It doesn't fit everybody because it's got to be the right rating, because there's alternatives here to the larger publicly listed REITs. So the right size REIT that doesn't have the same access as the big guys should take a look at it.
Right, but in essence, many of the traded REITs, the large REITs, go on their REIT lines. So they have and REIT lines are very low priced. They're short term, so it's a different type of product over there. Who would you say was the initiator or the first deal ever done for an Israeli bond
I
offering?
couldn't remember that. Do you remember that?
This was a few years back. I can't put my finger exactly on who did the
Was
first
it Abe
deal.
Lesser?
I think it could have been, but I think it was. But this was you're talking at a time where it wasn't a real, a real
catch up yet.
phenomenon. Yeah. Last
Yeah.
2 years is when it really caught on. So.
But the assets traditionally are in New York right now, or the
The majority
The
of
majority.
the
The
insurers
majority-
came
the
out.
mar-
It's
majority.
changing now. I think KBS is a great example
Right.
of how it's changing. KBS also represented, real corporate America that tapped into the Israeli market. I think, KBS is a specific
As
deal
they
that-
would say, KBS gave it the hexture, okay, of
Exactly.
of
Exactly.
purity of saying that we've evolved from a smaller
Right.
product from individuals to take care of a large REIT,
It's also very important for players like KBS with experience in corporate governance,
Right.
which were subject to U.S. regulation to come to the Israeli market, because it also brings confidence, I think, to the
A
market.
lot of comfort to investors knowing that, someone like KBS approaches the Israeli market.
So in essence, I think that it may have started a couple of years ago, but I think, as they would say, the best is yet to come, and that this market will grow. More people will take advantage of it. They will look at the advisors and what KBS has done, and I think it's a good market, and we should see it continue. I'd like to thank Yaron,
Thank you.
Avram, Keith, and Shimon, and I'll see you next week.